The government shutdown is finally over, and the entire market just stepped into a moment that could shape Bitcoin's next phase. The headlines look rough. People are worn out, and it feels like everyone is moving through this market without any clear signal. The fear and greed index just dropped to 15, the lowest reading since deep fear back in 2022 in the FTX times. Bitcoin's reaction to the NASDAQ stayed sharply negative. ETFs printed a heavy red day with more than 270 million flowing out from Bitcoin and another 180 million leaving Ethereum. Prices hovered around 100,000 and at time of recording, we're down at 98,500. And there's a lot of things leading into that, but mostly long-term holders are leaving, and this is creating a lot of emotion and fear. Also, the new participants also decide to get out. Now, everything looks ugly. So we see this huge movement of fear in the market. That's why it's at 15. But underneath that fear, something much bigger started shifting. These are the kinds of moves people only notice months later, when the cycle already turned. This is one of those quiet pivot moments. All right, let's go into why Bitcoin looks weak on the surface, even though the setup underneath it changed in ways most people have not connected yet. And again, remember, nothing in this video is financial advice. It's for educational purposes only. So let's talk about why the selling pressure feels so heavy. Bitcoin feels like it has weight strapped to its ankles. And here's why. Long-term holders are selling slowly, not in a big panic, more like a steady rotation. Some are managing taxes, some are rebalancing, some saw gold and the S&P outperform and wanted to lock in gains. Bitcoin's performance skew has been negative all year. That means Bitcoin drops harder on red equity days and barely moves on green ones. This pattern usually shows up near cycle bottoms. Retail sees sideways action, sees fear at 15, sees ETF flows, and bah, hits the sales button. All of this adds up to the same sound. The market is resetting. This is what it sounds like before the next phase sets in. And the reset matters because something large just came online under the surface. And guys, I've been thinking about it, all year pretty much, but even now a lot. Like the times in the past where I've just sat there and thought, when is this thing, when will the market actually go into a, proper run up? And, it feels like this every time, and sometimes for a long time, before things actually move. And I'm not talking about straight bear markets either. I'm talking about, like, for example, in the 2021 bull run, we had a strong run up in the first quarter, and then we had a very long correction that went all the way until like Q3, Q4 of later 2021, when we went on this parabolic run, all-time highs, and then a blow off top. But the reason I continue to make these videos is just because I want to show you guys what's happening behind the scenes. Personally, I'm not a short-term trader. I realize that as I chat with my friends inside private groups, and they're all looking at like 5 minutes, 4 hour, 1 day, maximum 1 week time horizons. And so we have different perspectives on whether we're bullish or bearish. And I've come to realize that. Just keep that in mind as you watch my channel. When I talk about things, I'm not talking about what's going to happen in the next week or two or even the next month. That's not what my time horizon looks like. My time horizon is more like over the next year, as far as when things could really move heavy or when we can realize some really good gains. And my time horizon is also 10 years holding high conviction plays versus trying to trade short-term action, short-term price action. And guys, while most traders were staring at the price, the rails that move money quietly upgraded. In just a few days, several major networks went live with new on-chain connections. And together, they form a single pattern. Visa activated USDC payouts for businesses, letting companies settle across crypto rails through the systems they already use. That's freaking cool. And then the Cash App followed, enabling Bitcoin settlement for dollar payments. Also very, very cool, which pushed millions of users onto Bitcoin's network without them realizing it. Stripe launched USD Sui, a fiat-backed stablecoin, making stablecoin settlements part of everyday commerce. And stablecoin reserves, they keep climbing. And the stablecoin supply ratio shows deeper liquidity under Bitcoin. Tether added treasuries, gold, and Bitcoin to its reserves, building a thicker base for on-chain liquidity. And historically, up until this year, we've always looked at stablecoin volume and total assets in stablecoins as a bullish, bearish indicator. As stablecoin total value continues to increase, that's one of the many factors that we look at to see if we're still in a bullish market. When it starts to turn around and drop down a lot, that's when we know one of the ways that we know that we're in a bear market. However, I'm not sure that's I think we should take that into a little bit less consideration, at least for our existing world as we know it in crypto, the blue chips, the altcoins, the low caps, these kind of things, because a lot of stablecoins are coming online right now to use in TradFi without the intention, at least not yet, of directly putting that into our bags, right? So just one thing to keep in mind. And banks moved next. JP Morgan launched its JPMD deposit token on Base and filed for a Euro version as well. Franklin Templeton expanded Benji funds to the Canton network, a private settlement layer for institutions. BNY Mellon, DBS Barclays, and HSBC kept testing tokenized deposits. Apple rolled out digital ID at TSA checkpoints, linking verified identity to the same digital rails now carrying money. Keep that in mind when you guys watch my interview with Simon Dixon coming up very soon. I think it's tomorrow or Saturday, but keep that in mind, guys. Payments, banking, and identity are merging onto a shared blockchain layer that's expanding quietly in the background. Most people will only recognize how big this is once the next cycle is already underway. And then we have this new interesting narrative. It's been around for about a month or so. It's the privacy narrative. And over the past few months, a quiet wave has been building that's starting to look like the next major theme for institutions. The Winklevoss twins launched a Zcash DAT through their newly rebranded company, Cypherpunk Technologies. The plan is to accumulate up to 5% of the entire Zcash supply. And the fund has already started by purchasing about $50 million worth of Zcash. The announcement alone sent Cypherpunk stock up more than 170%, signaling just how strong the appetite for privacy exposure has become. Momentum is spreading fast. A16Z led a $10 million raise for a new privacy-focused Layer 1 project, and Railgun usage has been climbing steadily. Interest in privacy tech is spiking everywhere. Ethereum created a dedicated privacy R&D division to build new tools, and Paxos began developing a private stablecoin in partnership with Aleo. Even US regulators are adjusting, with OFAC softening its posture as the infrastructure matures, and it shows it can align with compliance standards as well. For years, people thought privacy in crypto had no path. This was mainly because the exchanges wouldn't touch them. And now, because regulatory environment is softening, I think that's starting to allow people to believe in kind of the original vision of what crypto was supposed to be for. It was supposed to be, a private peer-to-peer transfer network, and then smart contracts as well. So the whole blockchain idea started with cypherpunks, right? And so now that we have the regulatory environment shifting to a more open framework, although they still arrested this guy from Samurai Wallet, which I hope he gets off. But nonetheless, we're starting to see privacy come back as a narrative. I like the idea of private transactions. I like the idea of being able to go buy a token without someone following my wallet and seeing what I'm doing. I like to be able to pay people for something and not have that be public. And I'm okay with having that privacy be in a compliant manner where, if there was a warrant or something, then they could somehow, see those transactions. But it's not really it's not the law that I'm afraid of yet. It's just the fact that I prefer private transactions to everything being public. And because we have smart money absorbing fear as well. While retail panicked, whales stepped in with one of the biggest buys of the year. More than 45,000 Bitcoin were accumulated in just 1 week. That made it the second largest week of accumulation in all of 2025. Exchange balances dropped, large wallets expanded. Smart money loves moments of extreme fear. They buy during emotional exhaustion and soak up supply when retail loses patience. This accumulation wave showed up right as the macro environment shifted. It goes back to the saying that we say quite often on the channel is be fearful when others are greedy and be greedy when others are fearful. And that's something I've tried to live by in the past few years, certainly at least. But one thing is you just don't want to buy a falling knife, right? So you have to make some sort of informed decision when you're trading or making, your investments in different things and how much cash you should carry and how much crypto you should be buying so that you're never ever super stressed. And if you end up buying a dip and then it ends up being the end of a bull market and it goes down like that, it's not going to put you in too much emotional stress to where like you're having bad thoughts and you're depressed, that kind of thing. So now let's talk about the macro reset. The bigger picture just changed, and it's worth slowing down to see how these moving parts connect. After 43 days, the government shutdown is officially over. The restart opens the pipes that froze hundreds of billions in spending and delayed key economic data. The White House already said October's CPI and jobs reports may never be released, which leaves investors guessing about inflation and employment trends. Markets are effectively flying blind for the next few weeks. At the same time, a new stimulus measure is coming. A $2,000 rebate for families is ready to roll out, and every child born over the next 3 years will receive a $1,000 investment account funded by the government. I wonder if we'll see a massive uptick in new births over the next 3 years. Let me know in the comments, guys, what you think. And then tariff changes are expected to cool prices on some imports, while policymakers look to balance inflation pressure with consumer relief. Rate expectations are shifting too. The odds of no rate cut at the next Fed meeting jumped to 41%. Still, odds are in our favor that they cut, and I think they personally will, but it's not so clear anymore. Combined with the end of the shutdown, that mix creates a burst of fiscal liquidity right as on-chain settlement activity expands across the system. Money is starting to move again. Spending programs are restarting, liquidity channels are opening, and the market is searching for direction without the usual data it needs to guide it. This setup often marks a transitional phase, the point where policy, sentiment, and capital begin to realign. So guys, I see a lot of posts on X and stuff like that about, is this $2,000 stimulus check going to be similar to what happened in COVID 2021? And I think it's worth talking about that for a second. So let's talk about the COVID stimulus and how that was looking. So you had check for $1,200 per adult, as was the CARES Act, then $600 per adult in the December 2020 bill, and $1,400 per adult under the American Rescue Plan, March 2021. And this current Trump stimulation is $2,000, and that would be at most $300 billion. So 2021 was a multi-trillion-dollar fiscal bazooka with nearly $1 trillion in direct checks. Trump's plan is at best a one-off $300 billion impulse, partly offset by the tariffs that created the funding. In 2020 and 2021, you had the federal interest rates at near zero or at zero and held there through the end of our bull market, right till the end of the beginning of 2022. Then they began quantitative tightening and higher interest rates, and we went into bear market. That means we were also going through massive quantitative easing. The balance sheet almost doubled to 9 trillion by late 2021. And for right now, we have the Fed funds at 3.7 to 4% versus that near zero. And over this period of quantitative tightening that is now coming to an end, the Fed shrunk its balance sheet from 9 trillion to about 6.5 trillion. Though they are already hinting they may need to grow it again for liquidity reasons. So to sum up to kind of end that debate, the 2020 and 2021 stimulus was around $5 trillion in total across 2020 and 2021. Now it's just 300 billion from this one. That's just one thing that we weren't really pricing into the market, and I don't think anyone thinks it's going to be nearly as huge as what happened during the 2021 stimulus. All right, let's talk about the perspective shift now. When you zoom out, this moment carries more weight than the charts show. The market just came through the longest shutdown in US history. Veteran holders took profits, sentiment hit cycle lows, ETFs flashed red, and retail walked away. Even with all that, Bitcoin has held, except for today, around $100,000. And again, except for today, staying above that 50-week moving average. Now that's, according to traders, that's very important, but the week's not over yet. So let's see what happens there. And on-chain data tells a similar story. The net unrealized profit ratio, or NUP, sits near 0.47. NUP measures how much profit holders are still sitting on when it falls to this level. Most traders are flat or slightly up, a pattern that historically lined up with cycle bottoms. Stablecoin ratios back it up. More cash is sitting idle while exchange supply stays low, which means liquidity building beneath the surface, even while sentiment feels cold. Moments like this test patience. They push people out right before the next phase forms. But these quiet stretches are usually where the next move starts to take shape. So guys, the government shutdown is over and the next chapter for Bitcoin has already begun. The real risk isn't the price. It's missing what just flipped beneath the surface. Infrastructure leveled up, privacy became a movement, whales are positioning early, liquidity is back in motion, interest rates are set to drop a lot over the next year, and we even have heard talk that they may begin and are likely to begin quantitative easing again quite soon. So all in all, guys, you're still very early in the grand scheme of things. You're focused and you're standing inside one of the biggest transitions this market has ever seen. So guys, as always, stay sharp, keep stacking your sats, and I'll catch you guys on the next one. See ya.